What's up, traders, and welcome to this final installment of the Market Barometrix Fundamental Analysis Crash Course. I'm your host, Neil, and in today's video, we're going to put it all together. We're going to pull from all the concepts that we've learned in this video series and do a full fundamental analysis rundown of applied materials. Now, we've already been talking about applied materials throughout this video series, so we're going to begin by revisiting what we've already found in relation to the valuation, profitability, solvency, and growth of applied materials, and then we're going to go on to talk about how all of these things relate. So we'll be looking at the financial ratios associated with each of the categories of fundamental analysis, and then we'll talk about how they affect each other and interact with each other to help us form a narrative so that we can properly evaluate the current financial condition of the company. So without further ado, let's jump in and perform a full fundamental rundown of applied materials. Alright team, let's begin here in the summary page. Now, I know this isn't a page that we've talked about so far in the Crash Course series, but it's exactly what it sounds like it is. It's just a summary of the valuation, solvency, profitability, and growth trend tabs. It's going to give us a quick reference and clue us into anything unusual going on with this company, and it's going to help us identify, where might be the most logical place to begin our assessment of applied materials. So pretty simple, we have 4 columns here. Each column represents a different category of fundamental analysis. Again, those being valuation, profitability, solvency, and growth. And each of these columns is just going to give us a selection of a few of our favorite financial ratios from each category. So on the far left, you have the valuation column. Next to that in red is the profitability column. Right of that in the light blue is solvency. And on the far right in gray is the growth column. So I don't want to spend a whole lot of time here, but let's do a brief rundown of each of these columns to see if there's anything that jumps out at us. So the valuation column here, we have the gauge up top there with the current reading of 15.24. That's the EV over EBITDA. That's my personal favorite measure of valuation. We see that the average EV over EBITDA over the course of the last several years for applied materials has been 11.99. So with the current reading of 15.24, it means that applied materials is slightly more expensive than it has been on average over the last several years. Next to that, the profitability column. Looks like return on assets up top there in the gauge is pretty much on par with where it's been on average over the last several years, 13.37%. I am seeing though that looks like in the beginning of 2018 or so, return on assets and return on equity has declined since then. We're still in an overarching long-term uptrend as far as the return it's generating on its assets and equity, but interesting to note that in the last few years it's tapered off a bit. Solvency, we have the current ratio up here in the gauge. 2.67 is the current reading. So slightly more liquid than it has been on average over the last several years with the average reading of 2.48. The only other thing that's jumping out at me about the solvency column here is this bottom chart, debt to assets. Looks like they have been growing their debt to assets ratio over the last several years, indicating that they're increasing the amount of leverage that they're using. So another thing to keep in the back of our minds. Growth, looks like their earnings per share is above where it's been on average recently. And when we look at the chart below that, this is the earnings per share trend. It looks like earnings per share has been up. But behind my shoulder here, you can see that that's also in the context of shares outstanding declining substantially over the last couple of years. So it would seem that Applied Materials is buying back shares. And that's going to have the effect of increasing their earnings per share ratio, right? Because there's going to be less shares outstanding. So that earnings per share growth is a little hard to trust because at least some portion of that has to do with shares being bought back. So kind of recapping this page here, what is jumping out at me is the fact that they've been buying back shares. It's slightly more expensive than it has been on average over the last couple years. The return it's generating on its assets and equity is mostly in an uptrend, but recently those returns have tapered off. So let's jump into each of these categories individually and take a closer look at what's going on under the hood. So let's jump over to the valuation trend tab and see how expensive this guy is. Applied Materials, we have the EV over EBITDA ratio selected. Looks like current year-to-date average reading EV over EBITDA is 13.75. And you can see that that puts us at the upper end of how expensive Applied Materials has been over the course of the last several years. So that's definitely something that we want to be thinking about as we continue our look at this company. It's expensive right now relative to where it has been on average over the last couple of years. So let's figure out if we can find a reason as to why it's more expensive and if that higher valuation is justified. And we also need to put that in the context of, its industry peers. So Applied Materials is pretty expensive right now relative to itself over the last couple of years, but it's actually cheaper than the industry median here as far as EV over EBITDA is concerned, with a year-to-date average reading of 4.78 for the semiconductors industry. So interesting to note. But again, the industry median has also trended up, and the industry median with a current reading of 14.78 is also on the expensive side as far as EV over EBITDA is concerned, relative to the average over the last several years. So it would seem that the semiconductors industry in general is getting more expensive, and Applied Materials has gotten more expensive along with it. So let's jump into some of the other financial ratios, see if we can get confirmation or see if we can find anything that diverges from what we've already found as far as EV over EBITDA. So price to earnings. Looks like Applied Materials is pretty much the same here, where it's slightly less expensive than the industry median right now, with a current year-to-date average price to earnings of 18.55. And again, it looks like Applied Materials and the semiconductors industry are substantially more expensive than the technology sector median and than the market as a whole. Enterprise value over free cash flow. Looks like that's pretty much the same. Price over free cash flow. Same story there. Price to book ratio. Looks like Applied Materials is nearly double the industry and sector medians here, and almost triple the market median. So it would seem that the price of Applied Materials relative to the book value of its assets is substantially more than its industry and sector peers. And that's one of the reasons that we look at several different valuation ratios, to not only gain more support for our perception of the valuation of this company, but also to find weird, unusual things like this, where Applied Materials is pretty much in line with the general expensiveness of the semiconductors industry, but it would seem that the book value of its assets is much less relative to the company's share price than that of its industry peers. So truthfully, I'm not exactly sure what the implications of that are yet, but let's keep that in the back of our minds as we move forward in our analysis of Applied Materials and see if it pops back up again as a factor. Lastly, price to sales here. Looks like it pretty much falls in line with the other financial ratios outside of price to book, where it's slightly less expensive on average this year than the industry median, but that Applied Materials and the semiconductors industry as a whole are more expensive than the technology sector and certainly more expensive than the market as a whole. So recapping this page here, it would seem that Applied Materials is slightly less expensive than its semiconductors industry peers, but that Applied Materials and the semiconductors industry are broadly more expensive than the technology sector and the market as a whole. We also discovered that for whatever reason, Applied Materials price to book ratio is diverging from the industry median and from the other information that we found in regards to valuation from the other financial ratios here. So now that we have a little bit better of an idea of how expensive Applied Materials is relative to itself historically and relative to its peers, and now that we've identified some more questions that we want answered, let's move on to the Solvency Trend tab to get an idea of how liquid Applied Materials is and what their debt and leverage situation is looking like. So jamming on over to the Solvency Trend tab, we'll start on current ratio. Give it a second to load here. So again, the current ratio is an indication of a company's ability to meet its short-term debt obligations. Takes current assets, divides them by current liabilities. So right now, with a current ratio of 2.51, that's telling us for every dollar of bills that Applied Materials has coming due this year, it has $2.51 in liquid assets, cash and cash equivalents, to pay those short-term debt obligations. So it would seem that Applied Materials has plenty of cash cash on hand to pay its bills. It's not generally as liquid as the industry median of the semiconductors industry, but still plenty able to meet its bills. And in fact, Applied Materials, the semiconductors industry, and the technology sector are all generally more liquid than the market average. So nothing really of concern there. Debt to equity. Again, this is going to tell us how much debt Applied Materials has relative to its equity. And, this is something of note here. With a current year-to-date average debt to equity of 1.35, Applied Materials is nearly double that of the industry median. So it would seem that Applied Materials has a higher debt level relative to its equity, relative to its peers. So let's also take a look at debt to assets here. And that confirms more or less the same story. It looks like Applied Materials has a substantially higher level of debt relative to its equity and assets than that of its peers. And this is something we talked about in the solvency video, but it looks like Applied Materials is generally more leveraged than its peers, meaning that it's employing higher amounts of debt to fund its business operations. Now, debt is generally more capital efficient because when a company raises capital to fund its ongoing business operations through equity as opposed to debt, they're essentially giving up a portion of future earnings. So the holder of those shares has an ownership interest in the company and are entitled to a portion of all future earnings. So debt, although it comes with an interest expense and needs to be paid back, is generally more capital efficient because the company is going to be able to keep, a greater portion of its future profits the more debt that it has. And as long as the return that the company is able to generate on the assets that were financed using debt is greater than the cost of the debt itself, then eventually that debt pays for itself. And that's an important thing to consider with a company like this. If it's not generating enough return on its assets and return on its equity to pay for the debt that it's employing, then it's going to be at greater risk of default. So with a higher proportion of debt relative to equity and assets comes increased risk. And as investors, we need to be compensated for that increased risk through superior returns on assets and returns on equity and superior earnings. So we'll want to ensure that that's the case as we continue our analysis of Applied Materials. But for now, let's keep in the back of our minds that Applied Materials is generally more leveraged than its peers. Lastly, total debt. This just kind of brings more confidence to what we already found. It looks like they've been growing their total debt over time. So recapping the solvency situation over at Applied Materials, they have plenty of cash on hand to meet their current liabilities coming due within a year with a current ratio of 2.51. Debt to equity and debt to assets, indicating that Applied Materials is more leveraged than its peers. All right, and that brings us to profitability. Right out the gate, we see gross profit margin is basically right in line with the industry median. Although gross profit margin in general for Applied Materials has moved up, while the industry median has moved down over the last several years. So that's interesting to note. Moving down to the operating profit margin level, that's the next level of profit below gross profit on the income statement. Looks like here we're seeing Applied Materials much more profitable than its industry peers, its sector peers, and then the market as a whole. And based on what we found in the solvency trend tab, this is what I would expect. I would expect that they'd be generating superior profits than that of their peers because of the fact that they're more leveraged, they're employing more debt. So moving down to the next level of profitability, we're going to go to net profit margin. Again, this is more of the same here where Applied Materials is much more profitable than its peers. So now that we've talked about the different levels of profitability, let's look at their return that they're generating on their assets and their equity. So once again, Applied Materials, much more profitable, much more efficient with its assets than its peers. And again, that's likely because they're employing greater amounts of debt. So while they're generating a better return on their assets, it comes with increased risk. And return on equity is identical to that. In fact, to an even greater degree. So Applied Materials generating a return on equity nearly 5 times greater than that of its industry peers. So based on what we saw in the Solvency Trend tab, this is exactly what we would want to see here in the Profitability Trend tab. So Applied Materials, much more leveraged, employing a higher proportion of debt relative to its equity and its assets, but also much more profitable and generating a greater return on its assets and its equity. Lastly, let's jump over to the Growth Trend tab and see if that gives us any more information. We're going to start with revenue here, and looking at the topmost chart, the yellow chart, that's Applied Materials revenue. We see that the trend of the last several years has, for the most part, been up. Although it looks like 2019 was kind of a rough year for sales for Applied Materials. But here we are most of the way through the year 2020, and revenue seems to have picked back up a little bit and is trying to resume its uptrend. Sales mostly being up over the last several years is also in line with what's been going on in the semiconductors industry, the technology sector, and the market as a whole. So mostly good news as far as revenue growth is concerned, although we'd want to be keeping an eye on this and making sure that revenue continued its uptrend over the next several quarters. So revenue or sales growth is trending up. Let's have a look at how profitability is trending. So the next level down from revenue on the income statement is EBITDA. Selecting the EBITDA button here. Looks like once again, for the most part, EBITDA has trended up. Although 2019 EBITDA took a hit, and diverging from what was going on with revenue here, it has continued to perform poorly in the year 2020. So while sales are back up this year, profitability at the EBITDA level has not followed sales higher. To that end, let's move down one more step as far as profitability is concerned on the income statement and look at net income. Again, this is the bottom line of the income statement and the most granular level of profitability. And here we're seeing some more of the same, more in line with revenue, with net income picking back up in 2020, but diverging once more where it looks like net income peaked in 2017, tapered off in both 2018 and 2019. So really, I don't think that's telling us anything that's that terribly important, with the longer term trend generally up at the revenue, EBITDA, and net income levels. I think it's suffice to say that growth is generally trending up at these three levels. Let's also look at free cash flow. And basically more of the same there. So it looks like 2019 and 2020 relative to 2018 has been disappointing, but that's also been the case in the industry and sector. So that's not a company specific disappointment. And with the upward growth trend mostly still intact and attempting to resume as far as revenue, EBITDA, net income, and free cash flow are concerned, I'm thinking that the growth trend is mostly optimistic for Applied Materials still, but I would be keeping tabs on this over the next several quarters to make sure that that upward growth trend does continue. I want to quickly look at earnings per share growth. Again, the trend in earnings per share can be manipulated by, a change in the shares outstanding, which was the case with Applied Materials. If you remember back to the summary page at the beginning of this video, Applied Materials has been buying back shares. So that would artificially inflate the earnings per share trend. So what I want to look at is, what is the current earnings per share for Applied Materials? How does that relate to the current earnings per share for the entire industry? So right now we're looking at the 2020 annual average. I'm going to drill down through the date hierarchy to get us to the most granular level of earnings per share, which should be the quarterly level if I'm not mistaken. So it looks like the most recent Q2 earnings per share was 3.17. While for the semiconductors industry, get to the quarterly level here, was 1.15. So Applied Materials producing superior earnings per share than its industry competitors. And that makes sense because, again, Applied Materials is more leveraged and is generating a greater return on its assets or greater return on its equity and is more profitable at the operating income and net income levels. So what have we found from this page? Well, for the most part, applied materials and the semiconductors industry is still growing as far as revenue, EBITDA, net income, and free cash flow are concerned. Although that growth has tapered off a little bit recently, applied materials and the semiconductors industry had a disappointing 2019 as far as sales and profitability were concerned. But those things have picked back up slightly in 2020 and look like they're attempting to resume their upward growth trend. Additionally, we found that applied materials is generating superior earnings per share relative to the industry sector and market averages. So let's start putting all these things together. The main question that we want answered is applied materials attractive as an investment opportunity right now? We go about answering that question by comparing our perception of the value of applied materials relative to how expensive applied materials is right now. Obviously, the goal being to purchase applied materials at a discount to the value that we perceive applied materials has. So what are the facts? Well, we know that right now applied materials is pretty expensive relative to where it has been historically. But in many ways, I'd say that that's warranted because the company has grown over that same time frame as far as revenue, EBITDA, net income, and free cash flow are concerned. The company has also become more profitable over that same time frame. So they've grown their profits and their profits as a percentage of their sales. We also see that relative to its industry peers, applied materials is actually cheaper than the industry is on average. While at the same time, applied materials is doing a superior job of generating profits, and they're also generating greater return relative to their assets and to their equity. So that's a pretty big deal. The company is cheaper than the industry average as far as valuation is concerned, but it's doing a superior job of generating profit and return. The biggest detriment to applied materials as an investment opportunity right now is the fact that it has increased risk to its competitors. So that's something of a trade-off as to its, increased profitability. But for now, with a current ratio of 2.51, applied materials appears to have enough cash and cash equivalents on hand to meet their short-term debt obligations. So I'm, for now, not as concerned about the excessive leverage that applied materials is employing relative to its industry competitors. So if right now I had to make a decision one way or the other about whether I was going to enter a new position in applied materials, I'd say, yeah, it looks pretty attractive. It's doing a superior job of generating profits and of generating return on assets and equities relative to its industry competitors. It's also slightly less expensive than its industry competitors. And it looks like the upward growth trend of applied materials is likely to continue into the foreseeable future. The main risk factor that I'd be on the lookout for applied materials would have to do with its excessive debt levels relative to its competitors. While that's allowing it to generate better returns, it's also putting it at greater risk. And in particular, if the business landscape begins to change and prevailing interest rates begin to rise, I would be concerned as to how that would affect applied materials solvency, its liquidity, and its ability to generate superior returns on its assets, return on equity, and profits at all points along the income statement. But before I pulled the trigger on a new investment in applied materials, I would also want to take a look at the current technical setup as well as the macroeconomic environment. So if you're still curious about those two facets of investment research, be sure to check out our other e-courses dedicated to technical analysis and macroeconomic analysis, respectively. If you guys like this video, don't forget to subscribe to our channel, hit that like button, leave your comments down below, and until next time, thanks for tuning in. We'll see you guys in the next video.